Are you with me? No, no, rainbow, curtain in the city, ocean, around me, downpour, upstream. Are you with me? Feeling
Ladies and gentlemen, it's 8 Instant CMT Charter Market Ignition Crypto Burp. Welcome back to the 6th edition of the Trading Congress, our annual trading summit and virtual trade camp for many traders to actually find a little bit of the accredited guidance, to find more confidence, more security, more inspiration, actually fair treatment from everybody who's actually done a lot in the space, right? We're talking about learning it early. We're talking about getting some reliable guidance, reliable information on a beginner-friendly level. And actually, in the world full of scammers, it takes a lot of effort to find the reliable people who have skin in the game, who have been proficient enough to not only persist, but also grow exponentially, just really making it, in the process. And one of which actually is our today's guest, my good dear friend, Michaël van de Poppe, known also as the Crypto Michaël. So there is so much of the pleasure that I'm gonna have throughout the entirety of the show talking to Michaël, because he's my true dear friend. I share special kind of like a love in my heart for this guy, and incredible team that he's built, and incredible success that he's got in the process as well. What can I say, man? Welcome to the show. How's it going? How are you feeling? How does it feel to be the start of Netherlands?
Well, thank you very much for the introduction. It's always like a surprise what you're going to be saying, but yeah, good vibes only, man. It's good to be here in the Netherlands. Actually, we decided to do less traveling now because we felt like it's going to be a rocky and wild period in the markets, and it's true, and business is kicking up, and it's great. Apart from that, I want to be out of the Netherlands, man. You're going to Dubai in a week. I'm jealous. I want to be out.
You wanna be like out for good, or you wanna be out for a day, for two?
Just for the winter, man. It's so dark. Like crypto is providing me the this sort of like gateway out of winter times, you know.
Well, it's dark outside, which is why we're staring at our white screens in front of us, right? With all the tickers, with all the coins pumping.
Yes, that's what. Yeah. Well, I mean, if the curtain is removed, you will see the candles, but we decided to remove it to make it a little bit more like one color paste. But actually, it's very cozy outside, but it's just too dark. But crypto is like doing great, so I'm all good.
Oh man, we're all familiar with what it means to be an issued hole, basically, right? Inside and outside, externally, internally. We've been there, we've done that. I think ups and downs all the way. Shape who you are today. I think there's all sorts of mistakes that I made in my career, all sorts of fuck ups, all the possible mistakes that you can name. I've made it all, so you can ask me anything. Basically, to an extent, I actually go gray, even though my hairline is perfect. I actually go gray already, so you cannot really run away from all the stress.
Dude, I literally just like earlier this week, they were like, I went to the barber. It's getting shorter, but my cuts are getting deeper, so I'm getting.
So maybe that's why you look slimmer.
Yes,
maybe you just got your hair.
But it's also the color is just taking it away, but it's also getting gray. And I think like being 8 years in this market is just not productive for the color of your hair, right?
Well, bro, at least you have something to cut. I mean,
that's true. That's true.
On the bright side, I'm quite aerodynamic, right? My aerodynamics are good, like a Lamborghini.
It helps with golf.
Or Aston Martin. With what?
It helps with golf, right? At least you
golf?
can say that you're playing.
Jesus Christ. Yes, it's gonna be so difficult to stay serious throughout this
Yeah.
conversation, everybody. Jesus. All right, listen up. Michael van der Poppe, of course, star, the guy, probably the most famous, Dutch guy in crypto and also outside of crypto, tagging into traditional markets right now. Running is very, very successful VC. Right now we are talking close to 750,000 people, followers. Good luck fitting that in one room, right? So much of the story, so much of the incredible success, man, on your end. Huge shout and appreciation, and just like I said, sheer love for everything that you're doing. However, the point of the day, the topic of the day is a vox populi, right? What people want to hear is when altcoin season. What is an altcoin season? Let's dive straight into it. What is it? Why is it? When is it? And all sorts of questions like that. Altcoin season, let's go. Tell me.
Dude, I mean, I think we are in an altcoin season for quite some time. But if we go back to when we started in crypto, 2017, altcoin season meant everything was going bananas. Like Verge went 200x in like a week. Digibyte did go crazy. Einsteinium went 50x before they changed the
Bro,
logo.
it was my first free X that I lost everything on top right after this one. So,
Oh
right
yeah. Well, Digibyte was my first one. I completely round tripped in 2 weeks. Went like 5x and all the way back. But
same
the
story.
thing is that altcoin season, if you look at it in terms of market characteristics, I think it is the markets and the traders going more into the risk curve. So you generally have to see Bitcoin showing confidence that we are in a bull cycle, which we currently see. Then, firstly, everything goes into Bitcoin. You saw the Bitcoin valuation start to drop. Then, once it starts to consolidate, Ethereum and all the layer one start to kick off. And then, once that takes place and they start to consolidate, everything within the ecosystem fires off. And that's generally, if you look at it from the 4-year cycle perspective, or if you're looking at it from the liquidity perspective, I think everything is currently in that perfect storm to at least have a lot of upside on those altcoins until, let's say, tax season next year. So that is what alt season means. And what you can get in return is a very volatile market with a lot of upside, but also a lot of downside. So if you do not time it well, then your returns will be less too. But there's a lot of like Bitcoin and money to be made during those cycles.
Oh man, so listen up. I'm went into my 50th coffee for today. So if you see me hyperactive, just ignore this. CMC altcoin season index is 56 points out of 100. 56 far, which is an improvement since a couple of days ago. Actually, let me tag it right in. What was it? A couple of days ago, on November 21st, I think it was close to 25. So we more than doubled in a week. All right. So there's a decent inflow of capital while Bitcoin is consolidating, which is quite a common thing, right? As in, it doesn't have to be like those incredible, stage crazy rallies for like 100x every single day, that the ones that you saw in 2017, right? Still, it seems we are getting closer to it, right? So what sort of like indicators, like how can people know, okay, when the altcoin season has actually started, when it's official, when it's unofficial, like how do you track it on your end?
It's actually, I think there are multiple layers. So the first thing is if Bitcoin starts to trend up or consolidate and doesn't crash, that is where you get the general thesis of trading altcoins. I mean, if Bitcoin is going to have the standard 20 to 30% correction taking place, the altcoins will not go up. So you need to have a strong Bitcoin to actually have that momentum. Then secondly, I think that the project or the layer one of the ecosystem needs to do well. Why am I saying that? Is that in the previous cycle, you had Ethereum quickly rallying, and then the whole ETH ecosystem started to follow through. That is still the same. If you look at the past few days, Ethereum started to do better. Yields came down, and that's usually the pendulum where Ethereum starts to do well. And for instance, yesterday, restaking, DeFi, Ethereum name services, all Ethereum ecosystem plays did do a double-digit day and start to trend up. But on the other hand, I think we have been in a Solana altcoin season for quite some time already, as the entire Solana ecosystem did do well, and meme coins started to take off substantially, and they have been yielding their return. I think that's rotating. So those are the two things that you need to be looking at, and I think that Ethereum is still the prime indicator for alt season. Why? Well, if ETH does well, the ecosystem does well, and most of the projects are still building on ETH. And if you're not building on ETH, you still want to have a positive sentiment for all the updates, upgrades, announcements, listings you want to have. And that's what you see right now. Listings are getting way more positive than what they used to be at 6 months ago. So as a summary, I think the layer 1 project needs to do really well in terms of momentum, and then the rest will follow through.
All right. So I'm just looking at the definition of the altcoin season, of course, from the perspective of what CMC actually provides you with in terms of the information, because they have an index, the CMC altcoin season index. Well, and long story short is that if the 75% of the top 100 coins outperform Bitcoin in the last 90 days, it's out. All right. So we need to see the 75%, which means more than 7 out of 10 coins out of the top 100 basically need to outperform Bitcoin, right? In terms of the 90 days Bitcoin performance. So there has to be like a significant run on the altcoin, kind of like a market, while Bitcoin actually might be moving, right? So it's actually just, it's not absolute, it's relative. And it seems exactly what we're looking at right now. Just like you mentioned, there's a lot of those so-called dino coins, just being revived all of a sudden, coming up with 2-3x pumps and rallies. However, I fully agree with you that it doesn't give you nowhere near close anything that was happening in 2017, those first true kind of like a bubble that happened with all the altcoins, right? And the altcoin season. So what I'm thinking, Michael, is basically, is it possible from your perspective? Is it something that you're looking forward? Isn't something that you think is going to happen? Basically, to have 2017 / 2021 rallies on altcoins, but bigger, for instance?
Well, look, I think the Dino coins are a great example. It always comes with a narrative, right? So literally nobody wanted to be in XRP, XLM, Cardano, and all the big alt famous coins that we had prior to Trump. And then after Trump got elected, we kind of knew that the SEC chairman would be replaced, and that their letter regarding all those coins being securities would be removed. So that created substantial efforts and narrative for all those coins to do well. Now the question is, 2017 and 2021 were two completely different cycles, where 2017 unlocked a big group of new participants into crypto. It was the first real cycle where the world started to know about Bitcoin, and then we had ETH and ICOs and all those things. 2021 was a cycle of venture capitals joining, a little bit more exchanges, and a few layer ones as competition for Ethereum, but not really a new group of investors. This time we have governments, we have institutional investors, and all those things. So I think that we're getting into a stage of a 2017 cycle, and the amount of liquidity being unlocked is going to give irrational numbers for all those altcoins. I also expect that if Bitcoin goes into this bull cycle, I think that this bull cycle is going to go higher than what we expect right now. That's generally a mindset that people have at the start of the bull, is that they expect lower numbers to come in because they have PTSD of the previous bear market.
Oh yeah. So what's the target? What's the target on it?
I think that the previous cycle should have gone to 100K to 150K. So based from that perspective, I think
this one or previous?
The previous one.
The previous. Right.
There were some letters or actually some articles that Sam was shorting Bitcoin and pushing it back in the second pull-up in November. Otherwise, we would have gone to 100K.
We need to sign a petition to raise the prices, for fucking hell.
But anyway, I think that the next bear market, it will land at 100 to 150K. So then this one should be going to 500
Hold
to
on. You say
700.
next bear market should land in 150K. Is that what you say?
Yeah. So
So
after
this
the
one that is
peak,
coming or the one after?
we are currently in a bull, so this one needs to
Yeah.
peak and then the next bottom.
So the next bottom you say is gonna be 150K.
Yeah.
Bro, I fucking wish that it's actually true. Let's fucking go.
I mean,
I
I
wouldn't
think
mind
it
that
just
at all.
lands on, I think it gets close to the previous all-time high.
Yeah.
And in this cycle, I think we just go way higher due to the fact that so much liquidity is being added, which means that I think that we get to at least 500,000 during this cycle,
Bro,
which is
that's
ridiculous, I know, but that's literally what I believe.
no, listen, I mean, market's proven that the funniest outcome is the likeliest one, right? As Elon Musk says, is the most likely one. Although, shit, I mean, listen, if it's gonna bottom at 150K, cool, fair enough. I can live with that.
Me too.
So
Yeah.
what was so you gave the minimalistic conservative type of a target. I see Vanek, I think they were printing the Ethereum targets for like 125K minimum base case, 22K by 2030 if I'm not mistaken. So not even 4 years from well, a little bit of north of 4 years from now. And it's Ethereum, not Bitcoin, right? There's Kathy Woods talking about Bitcoin, 500K plus, basically $1 million targets, of course. Michael Saylor and all that. Well, it's gonna be very difficult not to get at one point, right? There's gonna have to be like some critical opposition shift, all of a sudden to just deny and debunk all of that, right? We have each and every single fund right now getting interested in Bitcoin, right? The central banks basically putting aside reserves 2% or more, into digital assets, specifically Bitcoin related, utility tokens related, stable coins related, MiCA regulations, as we both know, are common. Fully unfolded, I think lawyers said 30th December, if I'm not mistaken, right? 30th or 30th, 13th. I think it's 30th. Regardless, so there's the barrier is just dropping, right? The curtain's just gonna fucking fall off, and there's gonna be not a single reason for all those big chunks of money basically coming, that never existed in the crypto space to go in, right? So I'm with you, man. I mean, I have no idea if it's gonna bottom at 120, 150K. If it does so, I'll be very happy. Please do it. Otherwise, the what I'm reading from the numbers, like in the conservative cases, for instance, like the simple fundamental valuation as in the MVRV, the market value, the realized value, and that is based on the composition and the component of the actual blockchain summary of the transactions and the money summed up in the transactions versus the market capitalization. Last time I checked, actually, hold on. Last time I checked, it was 288, right? The ratio is 288 against expressing the z-scores and the standard deviations. So it's not even 3 standard deviations against the mean of this ratio, historically flashing a little bit of a warning that the market can still rally after. Well, the warning signal is at 7. So it means statistically, I should say number-wise, there is at least 100% on top of what's already happened to just maybe trigger a warning signal that there might be top coming, right? So this taken as basically places as easily $150,000 to $200,000 just right now in a simple conservative case, not even triggering the previous top cycle kind of like signals. So what's the market cap of altcoins that's going to be in your perspective by the end of the bull?
Look, I think it's a tricky one because there's also the general question of, are we going to have a 4-year cycle, or is that a general thesis of a group of people that is going to be flawed? As in, are we going to have a longer bull and bear market in which we have stagnating periods like we've seen in this year? Technically, we've had a bear market from March all the way towards October for most of the altcoins, and now they start to fire up. So maybe we have a longer super cycle, whatever cycle you would call it, based on the fact that there's so much interest into the asset class. So I think that if you look at the size of the altcoin market, I think that a nice reference for me is that in terms of adoption, we get towards .com bubble types of numbers in terms of users, this cycle at least. And then you'll have all the narratives that are lagging behind the general Bitcoin and Ethereum adoption. So if you use those numbers and you use the amount of liquidity and valuation that was there during the dot-com bubble, that was like 15 trillion. And if you put interest rates on top of that, then it would have been 30 to 40 trillion in nowadays standards. Which means that there's, with crypto at this point being at like, what is it, 2.5 to 3 trillion, that's still a 10x. Yeah, it's still a 10x from here, which I don't believe is going to be reasonable, but it gives some perspectives on where we can go to. If you say it's going to be the same as the dot-com bubble and say it's 15 trillion, I think that the Bitcoin dominance is not going to be staying at 60%. I think that with the amount of Web2 founders jumping into Web3, building real companies, it's going to drop, get to like 30 to 40%, which means that the altcoin markets, by definition, are taking 60 to 70%. So that means anywhere between 8 to 11 trillion should be a definite target.
Yeah, which is pretty much exactly what I'm aiming, right? I mean, for whatever reason, we are all kind of like victims, I think, of fallacies. I mean, collectively as traders, as people of getting anchored and attached, for whatever reason, to those round numbers. So 10 trillion is my kind of like a go-to point, right? In terms of like the expectations, which still brings in roughly $6-7 trillion straight from straight from the altcoins. Bitcoin is actually taking close to 60% of the space right now. What I'm looking at is 57.28% as I look in my phone right now in the coin market cap. 13% close. Not even that. 13% of the market dominance comes down to Ethereum. So both combined, Bitcoin and Ethereum compensate for 70% of the space entirely, right? Leaving 30% to all those millions of shitcoins, all of those meme coins, pump.fund, strange things happening. So we're still talking about the Google Trends interest. Last time I checked, it was 52 or 58%, right? Versus 2021, bro. Isn't that fucking crazy that 5 or 6 out of 10 people that were here 3 years ago excited about Bitcoin, they are here, meaning that 4 out of 10 people, they are still not here. And the space is so much bigger right now.
Yeah. And it's also, if you take the measurement of total market capitalization, it is a measure that's being created by a third party having a particular group of assets in there. I think most of the meme coins aren't even in there. Most of the on-chain tokens that are not listed aren't even in there. And then you also have a lot of tokens that are included in the total market capitalization that are dead. So we need to redefine what total market cap actually means and which tokens are going to be in there or out there. I think it's a very a difficult one to measure, but it still gives some sort of idea of where we're going to go to.
All right. So how do you diversify in a situation, in a context like that? Like, how do you build your portfolio, for instance?
Well, I'm a risk taker. So timing the markets is quite hard, which means that I was quite early. I went all into altcoins, I guess, in June or so. So I had a pretty rough summer. But
hold on. You said you're a risk taker. Are you in Sendor or not?
we're not going to talk about that one. Yeah, I just bought something in that meme coin for fun purposes. But
Jimmy is gonna probably clap right aloud on the sense right now, muted, so you cannot hear him. But I'm pretty positive this guy's just jumping through the roof right now.
I mean, I actually said it in one of the tweets that I responded. It's fun to be in such a community because it brings me back to when I started in crypto. So
yeah,
I just bought some in that one, and I've got some skin in the game, and it's fun. I mean, there's nothing wrong with that. But going back to the question, I'm currently mainly focused on Ethereum. I think the entire Ether ecosystem is extremely undervalued and is currently taking over the Solana momentum. So DeFi infrastructure with restaking as a new narrative is something that I would like to include. Layer 2s and Deepin is also something that I'm integrating. And slowly but surely you get RWA in there, but RWA is heavily, and Deepin also as well, are both very skewed and integrated into our VC. So my personal portfolio is kind of like balancing out my VC portfolio, because if I have
So
DeFi in the
personal
VC,
is
then
shit coins, and VC is what?
there's legitimate coins, I would say.
No fucking hell,
Nah,
bro. I cannot resist but just teasing you. But go on. I mean, Ethereum focus, right? USD20 tokens, why
yeah.
not know that, right? We know the drill. Are you having any particular kind of like top cap positions that you're strategically positioned to benefit in the next couple of months, or like you're just distributing into indices? Like, what does it look like?
No, I've got particular coins that I think will be a higher beta play than Ethereum itself. So higher beta means that if Ethereum is outperforming Bitcoin, let's say Bitcoin goes up 10%, Ethereum goes up by 20%, your beta is 2. Then if you think that anything in the Ether ecosystem will do well, then likely it has a higher number than ETH. So if ETH goes up, the other ones go up more. In that thesis, I've got smaller caps and bigger caps. So I've got Optimism as probably one of the best layer twos out there that's mostly being used. Also with certain dexters, you can just trade through Optimism. That's one of the coins that I think you need to have in there. The same goes for Ethereum name services. Super low risk, super high beta. Today has shown that it's doing really well. That if ETH does well, this one goes up too. And then you have got a whole bunch of DeFi protocols that have a super low valuation. Even Aave is ranked at 2.5 billion at this point, or 3 maybe, but has like 15 to 20 billion of TVL locked into the protocol, making revenue, quickly accelerating. And then stuff like Rocket Pool, 200 million valuation, 5 billion of TVL in there. So those are the coins that I have. And in terms of smaller ones, I've got stuff that have been listed on Binance that are in a new narrative that got completely hammered, but are into a new narrative, which is restaking. So Omni, Renzo, and Wormhole are 3 projects that I think will do well, or at least have some hype. So that basket is generally for the coming like 3 to 6 months.
All right. So how do you decide what is good and what is bad? Like, do you have some numbers? Do you have some guidelines, strategies, checklists? Like, what does it look like?
The fun thing is that I generally like to use what the framework is for the venture capital. So, is there a product market fit? Is there a use case? Is the token having actual utility? Is there a good team of founders there? And then, if that stage is done, I go start looking at the chart analysis, TA, use some secondary market intel that we get, because that is something that guys that are watching, the retail investors, are not getting, but we do know that. I'll give you an example. Sometimes on social media, you see someone saying, hey, Celestia is going to have a big unlock. Yes, that's true. But what quite often happens is that it's being rolled over from the investor into new investors, sometimes KOLs, through a new vesting. So retail investors are looking to sell the position based on the token unlock data, but I know they can actually buy it on the OTC markets while the price is dropping. So that is info that not everybody has, but I can use it in my strategy. So that I put that into there. And
Why didn't you call me on that? You should have
uh,
called me on the phone.
dude, ticket sizes were too big, man, even for me. So I mean,
Well,
couldn't
what do
get
you
it.
mean? What do you mean there's not a big enough?
It
Easy.
is. It was big. It was too big. But so, I mean, TA and price analysis are coming in quite late at this stage, which is different than what I did 3 years ago. But once I'm into a position, TA becomes the most important part. I just try to make sure that I lower my risk over time, take profits, and rebalance back into the safe assets.
All right. So
I
I know
hope
the
that was
fundamental.
a comprehensive answer, but
Yeah, it was. It was. It was. I mean, the fundamental side, I dig it, right? Of course, like all the macro side, like the falling interest rates and all that stuff, liquidity being pumped in, money generation, you know, selling the bonds and everything. We know that. Or actually buying the bonds. What I'm thinking to know, and like I'm a newbie. I'm just entering the market, right? I'm a new guy. Like I said, I'm one of those 4 guys that were they're in 2021, but they haven't entered and they want to enter, and they don't want to make the same mistakes than they did last time. So give me the dons I should follow basically for this cycle.
Well, actually, uh, if you're coming back right now, you still have a good timing. But actually, I would say to erase everything from social media. Um, and why am I saying that? Is that if the group is coming back now, probably what they see on social media is that XFP goes to $100, and that is deriving
And
the
that's a
wrong.
solid target.
It's conservative target, yes. But I mean, it's hard. That's what I said at the beginning. It's hard. Coming back now when it's full blown bull, it's hard. So the thing that you should be doing is just to sit down on Sunday afternoon, have a cup of tea, and actually design a plan for yourself. Don't buy when something is going vertical. Start buying after 50% corrections. Have the most into Bitcoin and ETH. uh, Watch social media videos, but just take it as an argument and not as the actual reason to do something. Those are like the typical key steps going forward, I would say. And I think also what you shouldn't be doing, and that's something that I've been doing in the 2017 cycle, have a maximum of 10 coins, because everything goes correlated to each other. And the more coins you add, the harder it is to manage, which means that the marginal impact of your portfolio is net negative of going from 10 to 11. So just have like 6 to 8 coins, manage them well, and make sure you can trade it well, and then you'll be fine.
Or hedge, right? Do you use hedging or not?
Not right now. I'm directionally long. But for instance, for the secondary markets, as I just said, yes, we're going to integrate hedging to just secure the profits. And secondly, for the venture capital, we need to do that as well. You could
So
say
like
that.
you're gonna go for hedge funds, or you're gonna go for currencies like stable, or what is it gonna be?
Uh, I
Or
mean,
Sendor?
I mean, if you have a venture capital position that is relatively illiquid and you're locked for the rest year, but you want to lock in the profits, you need to hedge it somewhere. So you need to hedge it with Bitcoin and ETH, or you need to hedge it with any other big altcoin, but then you're always having some sort of risk. With my personal portfolio, de-risking or hedging means I go back to the base assets, which in this case is Bitcoin and ETH. And if I go further into the cycle, it's going to gold and cash. That's it.
And Sendor, all right. So the common mistake, common mistakes, from my end that I think I made. Of course, like I said, I made all sorts of possible mistakes. Right. One of the mistakes was basically getting out too early.
Mm-hmm.
Right. What I think crypto has got is this in its inherent chaos and its inherent dynamics, basically, that you cannot get anywhere else. That when this community aspect, take over, what takes over, actually, that's where you get all those 10x rally extensions out of nowhere. That's where you have those mad crazy pumps, that you don't get anywhere else. Not only because of smaller liquidity and the smaller size of the market, but also because of the actual community impact, right? So underappreciating this community impact and how crazy people can get, right? How crazy of the herding instincts we all have when the markets are pumping, and we are not on board, we're not on train. Then it actually has this, what we call actually just the positive feedback loop, right? As in, it empowers those spirals that just go on and on and on and crazier. The deeper you go, the crazier to go. It works both up and down. And I think appreciating and just rallying within the strong trends, right? Like surfing on the wave, basically, is exactly what I should have done many times in the past, and something that I think is one of the key lessons learned, basically, because sure, you can capture a 50% rally, that's all right, right? But if you get out too early, you're maybe missing out another 10x on top of this, right? And as a result, basically, you're leaving so much money on the table, and then later you're gonna have the pressure of getting in to position back again, right? Resulting pretty much of just having this pure quintessence of this FOMO, and just entering at the very top, of course, when everything reverses, because that's typically when you feel the biggest amount of FOMO, right? So from your perspective, though, because you mentioned the dons, what about the do's? What should everybody do in order to make it in this cycle in terms of capitalizing on the best altcoins? Just staying, like I said, not going crazy and mad after this bull run, not blowing up the portfolio, somehow just building something. Well, stable is a wrong word in crypto, but something reliable throughout the bear times.
Well, okay, look, for instance, if you are having a take profit and it goes up after, congrats, you're in crypto. It happens. Um, what I think is, and I actually mentioned this earlier, is that you need to have a plan, which means that if you have a solid risk management plan and crypto goes bananas, then you can't be staying into the exact same amount of positioning when it goes triple, because the risk for your personal life and the impact on your life will be substantial if it goes down again, which means that on the way up, you just need to start scaling out. And you don't need to get out of the position entirely. You can just take off snippets of the underlying position every 10 or 20 or 30% that it goes up. Then you have take profits, you can de-risk back into the base assets, and you keep having the position. So you have both of both ways. The only concern that you have is that you need to time the macroeconomic fundamental part as good as possible. But then again, if you have a crypto portfolio, including altcoins, and you start scraping off and go back into Bitcoin and ETH, at some point that entire portion is going to be substantially larger than the rest of your portfolio. So you need to get out of crypto anyways, independent of whether the markets go triple even more. It's just from a risk perspective. And I think that a lot of people should define their plan based from risk rather than their rewards. And if you look at it from that perspective, and if you yield anything better than Bitcoin, you are outperforming literally 99% of this world. A standard return in the indices is like, if you're lucky, 5% to 8% a year. Bitcoin is doing 63% year to year. And if you can do 300 to 400% in a year, clap yourself and just move on. But you need to have that plan with the rebalancing taking place and the focus on the risk. That's just how I'm going to navigate it.
Yeah, and how do you basically know, for everybody in layman terms? Well, not so much layman, but how you can observe, the volatility picking up is you just observe volatility indicators. You can watch it under the standard deviation, or just basically standard deviation annualized, or
Mhm.
the ATR. With the market technicians, the people who deal with technical analysis use the ATR, for instance, right? The average true range, which basically captures the high and the low within a certain period of time, typically on average like 14 days or so. And whatever it is, part of a candle at OHLC, if it's open, high, low, and close, doesn't matter. You just measure the biggest widespread kind of like a distance, and that gives you the sense of volatility. Of course, if this distance is rising, this entire chop just gets bigger, and it means that you can win more, but you can lose more. So this is where the volatility peaks on the
Mhm.
very market tops, right? On the market peaks, on the key market reversals, this is where you see like typical 20, 30, 40% slides in a single day, which if Bitcoin breaks 100K, this is all adding 1 0 basically to everything that he lost back a couple of years ago, right? So 10% slide of 100K is going to be 10K. Okay, it's not impressive, but 10% slide of 200K is already 20K. So that's a lot of money, right? Per one Bitcoin that you own. Then, of course, we're talking mild corrections, but if a slice you get, like 200,000 target, for instance, and you get a slice of 40%, then we are talking losing $80,000 just in a
Mhm.
single day per one Bitcoin. That's shitloads of money. That's where the volatility is actually the biggest. And this is a typical kind of like a peak top time volatility that, happens so many times. And what I think, well, in my case at least, what I did in 2021 at the peak Q4, of course, it takes time to off ramp and just get money out somewhere else. I did real estate, I did gold, silver. I'm a big fan of physical gold, silver. Uh, Getting basically money anywhere else than crypto in the light of such a big volatility is already a better choice. If you don't know what to do, just take it on, put it into cash, and it's just going to be so much of a risk reduction that is just going to be sufficient enough, right? Until you
Mhm.
decide what to do else. You can do business inquiries, you can install your own restaurants, you can go, I don't know, but just like we spoke, go and set up a VC for early startups, for like early startup venture capital, or you can do so much more, but so much more that is basically each and every single thing is going to be better than just holding it through 40% volatility slices and the drawdowns from the single day just on Bitcoin, right? Not to even mention that altcoins are so much more overreactive, just tipping 70-60% a single day. So all you have to do is just basically lead not to having a situation where your portfolio tanks 50-60% per day, on a single reversal day. You don't want to see that because it hurts. And if you add up those six-figure zeros right now with Bitcoin pricing over 100K, well, that's just going to hurt like motherfuckers. So we don't want to do it, right? So because we're already 40 minutes past the session. I promise it's going to be 45 minutes. So getting closer to the end of the show, everybody. I think the key question, the key takeaway, from mine before I ask yours, Michael, is basically that you have to let your profits run. That's one thing, of course, right? Just not trimming too much of the position, still knowing that the retail haven't really adopted yet, and that there's so much of the retail coming, that the institutions are coming, that the pure kind of like valuation different methodologies are still nowhere near the peak regimes. They're still 2-3x from here. The altcoin market cap hasn't even risen so much. The altcoin index is 57%, right, against what it was 25% just a couple of days ago. The extreme greed is here, so it's good. It's trend promoting, right? And I think it's just trying of getting out too early, and at the same time trying to reduce ahead of the time, not after it happens, to avoid this maximum drawdowns in every peak. That's what I will be trying to execute. That's a lesson learned that I learned from the past mistakes, and something that I encourage everybody to at least dig down deeper into it. What's yours key recommendation?
I think it's an ocean of emotions, and I don't find the actual word, but it's going to be like it's all going to be impacting you. All external factors are going to have an impact on the decisions that you will be having. And the further you go into the cycle, the more you will have on media, social media, friends, all those things. So what you need to do is to have a plan that has the least amount of variables required to execute properly to get the highest return. Because you need to control the market, and the market shouldn't control you. Which is, in the sense that if you have a strict plan with your portfolio and say, for instance, if it is 100K at this point and you have 100K in stocks, and you say, well, in 6 months' time, I would like to have 50-50 balance again. So after 6 months, the 100K becomes 110K, whatever, or just 100K, keep it simple. And your crypto goes to 500K. Then your total portfolio is 600K. You need to know, or you need to make sure to yourself to move back crypto into the indices. And if you do that, you erase everything on social media being said on crypto. You are de-risking yourself because you go lower on the risk curve, and you have the ability to put back money in the next bear market and continue to grow. And again, it's all about reference. So if you see someone making $1 million on social media, just need to make sure that 99% loses everything, and that if your benchmark is 60% with Bitcoin year to year, that if you do better than that and you do that for a few years consistent, you'll be changing your life anyways. So my key part would be to take the control into your own hands and to be patient.
Yeah, and then on top of that, get an Aston Martin like Michael did the other day.
Yes, and then sell it again in the next bear market.
Exactly, right. No, listen up. I mean, the only problem with this session is that I could let it go for fucking ever, and then it's just not gonna end anywhere, because Michael and I are good friends, as you probably noticed, and just enjoy, discussing with this legend. Listen, I could also recommend for every viewer, who's new to Michael profiles, that you go ahead and follow Crypto Michael profiles, basically, and Crypto Mick, MICHNL, right? Crypto MICHNL on Twitter. And you can do it, although already he's got a whole stadium of people and even tenfold of that. So So it's hard to get better than this already. Still, listen, I mean, I so much appreciate your time coming in. Of course, you've got an incredible thing going on your end, with the entire analysis research side of the team, of the consultancy, with the VC part, right? You of course are so much often talented, surrounded with incredibly talented people. So huge shout out to Esme, to everybody else right there who's such a hard worker, so incredible people. And I think you just deserve all the glory in the world, basically coming from all the people, all those new people who are going to be coming. Do make sure you have Michael on your list, for whatever Michael does, for whatever content Michael does, because it's always top notch, 10 out of 10. And before I go, I actually just want to remind for everybody that we have a special QR code right now that's going to pop up on the screen for the giveaways that we give away, free memberships, basically VIP memberships. So all kind of like access included, all inclusive, if you will, to basically give you away for free every single day. So all you have to do is just scan the QR code. And as we are actually there, you can still join, on the open days in celebration of feast, because the Bourbonness is going to celebrate its 7th anniversary and starting off soon the 8th year of working in this industry, which is light years basically, and a lot of time, when compared to the traditional finance. And taking this opportunity as well to give a huge proper shout out to our partners and sponsors at DYDX, at Bybit, at Cointel, at Dragon's Lad. These guys are also doing incredible work. Highly encourage you guys to give it a check. And again, scan the QR code. It's gonna take you right in. And well, what can I say, Michael? It's been true pleasure. I appreciate your time, your knowledge, your being you, and we definitely have to catch up for golf.
Thank you very much, Adrian. I just wanted to add one thing, that if I don't have any community anymore, but once I quit my community, I actually handed over the people towards you. And I think that if you are a retail investor, then your community is the most engaging, lovely group of people that's out there. So make sure to check it out. Also, hi to everyone there from the Bourbonness team. Can't wait to drink some stuff again in any place on this planet. Get some team members being lost again. But yeah, I'll catch up with you soon again.
Careful what you wish for, Jesus Christ. You have no mercy. You have no mercy. Listen out, everybody. I've been your host, Adrian Zinchuk, CMT, Charter Market Technician, Crypto Verb. Let's roll on with the next sessions of our Trading Congress 2024. Peace out. Thank you so much. God bless. Bye-bye.